joining us for today's webinar. My name is Julie Petty and I work with Meat and Livestock Australia as the Goat Industry Project Manager. Today's webinar is all around MLA's cost of production calculator and how you can use that within your business. Before we get into today's topic and I introduce our guest speaker, I just wanted to let you know that after you join the webinar, you'll just need to connect your audio, and there's some instructions there on the screen for you to see on how to do that. It's just an O2 number that you can dial to join in. That information is also on the registration email and so forth you would have got when you registered to join today's webinar. So don't stress if you haven't had a chance to write that down just yet. You can also join via your computer with your headset, and there's a video address there as well, which again would be in your meeting confirmation you would have received. For today's webinar, just to help cut down background noise and so forth, we've actually muted all of our attendees just to help with the noise factor. If you do have a question at any point in time, however, you're very welcome to pop that into the chat function, and there's just some instructions there on the screen as a bit of a guide as to how you can use the chat function, and you can send and be the only person who sees it, or you can send it to everyone or another attendee and so forth. And just to check that you guys can hear me well and you've found the chat box, did you want to just pop in how hot it was at your place on Sunday? That'd be lovely. Just pop that into the chat box and I'll see those as they start to come through. And then I'll know that everything's working, you can hear me, which would be absolutely lovely. Whilst everyone's doing that, I'll just give you a really quick rundown about who and what MLA is. So as a lot of you would know, we work in collaboration with the Australian Government and the red meat industries to promote profitability, sustainability and global competition. We invest in things such as research, development and adoption, as well as marketing. You may not be aware, but you're not automatically a member of MLA. So it's free to join. You can just do that really quickly online on our website if you're interested. Or flip me an email after today's webinar and I can help you out with that. That's no worries. Okay, so in response to the question about how stinking hot it was on Sunday, I think the record is reading through the comments. So we've got some people who had a lovely 43. Some lucky person had 20 degrees. Geez, that'd be good. And David Dixon has sent through that it was 42.7 degrees in the shade, so it would have been hideous in the sun. So thanks very much, everyone, for sending through that. At least I know you can hear me okay. So moving on, today's webinar, as I mentioned, is all around MLA's cost of production calculator and how you can use that. We've got an excellent guest speaker on to talk to everyone today about the cost of production calculator and how you can use it. John Francis is based out of New South Wales. He does a lot of work with red meat producers across the state and interstate as well. And he has a lot of experience in this area in terms of things like benchmarking, looking at production and so forth. So John is going to take us through just some tips on how to use the tool, some information that you might just have on hand that'll help you in terms of filling out the tool and so forth to make it nice and quick and easy. And John, what I will do, give me 1 second, I'll just change it over now so that you are the presenter, and then we will be able to kick off. Does it come through, John?
Yes. Good afternoon and thanks for the introduction. As Julie said, my name's John Francis. I'm a consultant and director of Holmes Sackett. We're a consultancy based in Wagga in New South Wales, and I guess the reason that I'm delivering this webinar is that I had a role in the development of the spreadsheet version of the cost of production tools for MLA. Since then, MLA have improved the cost of production tools by making them more user-friendly. They were a little bit more analytical when they were in the spreadsheet version, and they're the interface is far more user-friendly now, and they've also hosted them on the MLA website. Now, I'm a bit of a webinar newbie, so apologies if the technology gets the better of me, but we'll aim to manage this process as efficiently as possible. So hopefully you're all familiar with the process of the webinar, so I'll get on to the delivery. I can't see the chats and so on, so if there's questions and so on, I think what we'll do is try and block it up a little bit, so after a session, I'll try and take some questions, and those questions will be submitted via chat. So the aim of the webinar today is really to identify the minimum data entry requirements to provide a sensible output of the use of this tool. The day is focused on goats and goat producers, but the application is across all enterprises. The application might be slightly different for other livestock enterprises, but the process will be relatively similar. The second point I want to make is that I want to improve your familiarity with the tool. So if you're not familiar with it, feel free to go on, play around with it. I think that's the best way to increase your familiarity, and hopefully today, as I run through the tool, it will assist you in understanding the different components of the tool and what to enter. I want to provide some detail about the methodology, which is important for interpretation, which is what next week's webinar is about. And finally, I'm going to work through an example to demonstrate data entry. And the next webinar, as I said, was about how to use the information to improve productivity. So that's all about the outputs and what to do with the outputs to improve something, because obviously you're not going to go through this process, because it's a fair investment of your time, without understanding why you're doing it. So I guess the key points for me are to start with the end in mind. Know what you want to achieve in using the tool. So the tool's designed to calculate cost of production, and that's a means of assessing the operational efficiency of a livestock business. So generally speaking, if we put that in context, capital expenditure and financing costs aren't included in these calculations. Now, I'm going to speak more on those issues later in the presentation. Now, this doesn't mean that the tool can't do more than this, but it's important when you're considering how to use it, because data in influences data out, or the outputs. So if you're using the tool to compare your results with others, then the way you enter the data becomes absolutely critical, because it ensures that you're comparing like with like. If you're using the tool for some other purpose, like running scenarios or all sorts of things within your own business, then that comparing like for like becomes less important, and you can manipulate the numbers in with whatever way you like, provided that you understand what you're doing. Now, I've entered a range of numbers in this tool to give you an idea and a case study, but the idea of this webinar is more about focusing on how to enter the data correctly than it is the actual numbers themselves. So I want you to think about the processes more so than what the actual data points I've entered are. So I thought what we might do is just start with a few polls to set the scene. Now, this is, I'm putting the fate of this webinar in Julie's hand from here. We've got a few polls, and I just want to try and get some audience participation if this works. So, Julie, are you able to run those polls?
I'll do that right now. It was the first two. All right, so the first poll that we're going to be popping up is all around just helping us get a better understanding on who's online today, what your production system is. So there's some questions there just relating to, whether you've got dairy goats, fibre goats, managed meat goats, whether you've got other livestock other than goats or no livestock at all. So if you just wanted to pop your answers in there, we'll probably close the poll in a couple of another 20 seconds or so. Everyone's had a chance to stick their data in, and as we said, it doesn't matter at all if you don't have any goats. The methodology.
And we might do sorry, Julie, we might do the second one at the same time as well. Just tell us how many goats you marketed last financial year. And if you've answered F to number 1, there'll be nothing in number 2.
All right. Okay, cool. Okay, so I'll just close that first poll. Closing. Everyone for putting your answers in.
So the idea here is this should give us a real-time, some sort of real-time idea of what the audience participation is in terms of the types of enterprises that they run and the scale of those enterprises.
Mhm. Okay, so it looks like, so for the first one, we've just had some feedback coming through. Around 50% of the audience has other livestock other than goats.
Right.
There's quite a few not managing goats, and there's quite a few who have managed meat goats. So that's great.
Okay, excellent. Righto, that's great. So can you just hand back to me, please?
Sure. No worries. Just changing you back to be the presenter.
There's the results there, as you can see down that side now. Okay, so thanks very much for that. That's a good starting point and gives us an idea of where people sit. So it sounds like a number of you aren't goat producers. Don't stress. The same process as we are demonstrating today will apply to all livestock enterprises. And in fact, the example that I've run is a multi-enterprise example, so the tool has capability for that as well. So look, let's start with navigating the tool, and rather than operating this tool live, which I thought was bound for potential failure because I'm not that technically savvy, I thought I'd just take screenshots to give you an idea of the process and how it works. So just navigating the tool, the first thing, I guess the majority of you hopefully are familiar with the internet and so on, and I just typed in goat cost of production tool in Google, or COP tool, and the first thing that came up was that MLA cost of production tool. And that brings you to the right-hand side of the screen there. So after you go into Google and click on the top one, the right-hand side of the screen is what pops up. Now, here you get the option of establishing which enterprises you manage. So if you're a cattle-only producer, you tick just the cattle box. If you're a sheep-only, you tick just the sheep. And if you're a goat-only, you tick just the goat, or any combination thereof. So you can tick all three, which I think in this example I did, and then just get on to the get started part. Now, there's a little a timepiece here that says 15 minutes. I think that's particularly ambitious, is my experience. Sorry? I got some feedback there. I think that's particularly ambitious. I doubt whether it's going to take 15 minutes to complete the tool. Okay, so the other part I just wanted to alert you to is that there are case studies available, and these are available in the screen preceding the cost of production calculator, and you can tick on any one of those and it'll give you an example of how how to use the tool step by step. So, and this is just a screenshot on the right-hand side of the screen demonstrating just how that case study looks. So, once you get to tick the next box from the preceding screen, you have the options available to you shown in this screen. So this is effectively what comes up in the cost of production tool when you tick the next. So when you tick that your enterprise is GOAT, this is what comes up. And so what you are provided with in terms of options are two tabs up the top. The first is the managed goat herd, which is right here, and the second is the harvesting operation, which is the right-hand tab. So I'll just run you through each of those tabs. With a managed goat herd, you have the option of producing fibre, dairy, or Capretto and Chivon, which is the and doe and buck meat as well. Or you can scroll to the harvesting operation tab, in which case things will look different. Now, the distinction between the two is surrounding inventory. If you're in a rangeland situation and you don't know how many goats you are running, there is no point in filling out the inventory tab. And I'll just run you through that quickly. So the aim of the goat herd inventory sales and purchases tab is really to capture the level and the value of the production within an enterprise in any given year. So the production, in this case, is measured in kilograms of live weight produced over the year, and that's the sum of the change in production inventory, which is in kilograms of live weight, and the sales less the kilograms of livestock purchased. So the inventory is particularly important, in which case that means you will need to know in a managed situation, and certainly with beef and in sheep situation, you'll need to know your opening numbers by class of livestock, and you'll need to know your closing numbers by class of livestock. It also helps to understand the movements of those livestock within the year so that you can fill those two things in. The second part is, I guess the point I'm making there, and is that inventory has an impact on the production within any year. The value of the production is measured in gross dollars, and that's calculated as the value of any change in inventory, plus or minus. So you may have a lower inventory value at the end of the year, which will be deducted from any sales, or you may have a positive increase in value of inventory. And the value of sales is taken into account and the value of purchases to give that complete trading value. Now, as the number of goats running on any given property at opening and closing isn't discernible in a rangeland operation, then you forget about the inventory weights and values, and that's largely the point distinguishing the harvesting operation from the managed goat herd tab. The inventory weights and values are really important in goat herds producing fibre and dairy products because there's multiple sources of income in those enterprises. So that is, there might be fibre and meat, or there's milk and meat produced from those enterprises. Now, the cost of production apportions those based on the contribution or the relative contribution of each component of income generation. So the tool's going to provide an output based on all the sources of income generation. For example, if you produce milk and meat, then the cost of production will be delivered for each of those. And that same methodology is applied to wool enterprises and prime lamb enterprises where multiple sources of income are generated from the same enterprise. So what do you need to know to fill in that first tab? Well, the first thing is you need to know your date of opening for the cost of production period. So you need to start with that in mind. Whether you do a financial year or a calendar year or a production year is irrelevant to some extent, except that you need to know the date and you need to know the influence that lambing or calving or kidding dates have on those opening numbers. The second thing you need to know is your stock flow. The third thing is how classes of livestock are categorised, because we need those categories are particularly important in the inventory tab. And finally, you need to know the kilograms of product sold and the value of sales. So the 15 minutes, I think I've probably blown it out just in capturing all that information straight away. So I'm going to run you through what I would do when faced with the data entry point that we've got. So I would start with understanding your stock classes. And in this case, a stock class is the definitions of those stock classes are provided here. Now, in the tool, you can actually hover your mouse above the word does, and it will provide this definition. So if you have a female goat or sheep which is less than a year old at opening, it should not go into the doe category, because this doe category tells me that they are greater than 1 year, and so on for each of those categories. So these categories are particularly important. So anything that's under 12 months will go into kids, Capretto or Chevon if they were there at opening, and anything older will go into does, wethers or bucks. Okay. The second part of establishing the data for the tool is understanding your sales summary. So in this case, I've just gone into, you may have that sales summary in your records. If you don't, there are a range of other ways of dealing with this. And one of those is to look at the sales, to consider the sales that you have made. In this case, looking at the number that were sold, in this case 665 young goats, and their weight at sale was 28 kilos, that's live weight. So the sum of those, or the multiplication of those, the product of those is 18,620 kilograms. And there is bucks sold and does sold in this example as well, and the sale value is calculated down below. Now, the reason that there's $8 per kilo in that, I don't want to get into the detail, but this example was a managed goat producer who received a premium relative to the existing market indicator. So that's not a misprint in terms of the value of product sold. It is a real life example where someone achieved a premium over and above the market value. Okay. Understanding your stock flow. Now, this part of the cost of production tool becomes particularly unwieldy and difficult. I think the easiest way of considering your opening and closing numbers is to actually understand all the processes that get you through to opening and closing numbers. So if you consider this example, this is a 1,000 doe spring kidding herd, and in this case the natural increase is 900 kids, and I'm just going to talk you through what the process is here from left to right. So there were 220 does in this case which weren't over a year old, but they are actually planned for building or replacing does in the herd. There were 20 bucks, and there's a number of transactions that go through this process. Now, this isn't available on the tool, but it's just to give you a mental picture of exactly what happens when you go through this process. So there's 1,000 does, 606. So of this natural increase, 665 of those were sold, 15 died, and the remaining 220 were designed to replace these, which were designed to replace the does. So if I just think, if these are here at opening, the same class cannot be here at the end of the year. It's got to be different animals. So these are moving through to the closing numbers here. There were 200 does sold within the year and 20 deaths. So the number of does required to replace the ones sold, which are these, was 220, and that leaves a perfect balance. Now, I understand that doesn't happen necessarily in your systems. It's not a perfect stock flow, but it's an important part of the process, is understanding how these stock flows. So these numbers here, 900 natural increase, the sum of these adds up to that 900, so you can track those through. So we've got 220 at closing. And finally, these 220 go into replacing the younger ones, which were replacing the older does. This stock flow is really important, and understanding how your numbers work is really important in any system, not just goat systems, also very important in sheep and beef systems as well. So I just want to run you through my example here of So I've taken the data out of that preceding tab, and I've just run through exactly, in this case, I've just run through and shown how I've entered that data. So in this case, this is a managed goat herd. I've picked the I produce Capretto or Chavon. In this case, I opened with 1,000. I put the weight of my livestock, and that's an average weight at opening, and an average weight at closing. I've put the value of those does in the opening and the closing. So you can see that there's no change here, because there's no difference between the opening numbers or the opening values between opening and closing. Now, an important point of this tool is that for the stock values, if what you're trying to assess is the operational efficiency of your business, don't change the values between opening and closing. Now, you're welcome to play with it to see that the impact that it has, but I think get a long-term price and stick it in there so that you're really looking at the operational efficiency of your business, not the impact of trading gains on the bottom line. Now, as I said earlier, you can manipulate the tool to provide different outcomes. It's fine to go ahead and put different openings to closings and seeing how much that might impact your bottom line. But I think if what you're trying to do is assess the operational efficiency of your business, try and keep those values as a sort of 5-year average or thereabouts. The same for Chavon. We had 220 at opening at 35 kilos, $70 per head, and the same at closing. So there's no inventory change here. And we had a number of bucks. We sold some bucks within the year, and we bought bucks or billies at the end of the year. So there's no difference in the total livestock in this example. There's no difference in the weight. So there is no difference in that inventory between opening and closing. Now, typically, you will have some difference because things don't work out as perfectly as I've shown in this example. The next part I've done with this example is just put in the sale of those 200 does. This is the total live weight of those 200 does and the value. I've put in the value of that Chavon. I think it was 600 from memory that was sold. So this is the gross weight that was sold, and this is the gross value of sales. And for bucks, I've put in the gross weight in live weight kilos and the gross value. In this case, we've also got the value of purchases of the bucks, or the weight of purchases of the bucks, which was the same as what we sold, and the value of those purchases. So at the completion of this tab, you should have the kilograms of live weight produced from your system, which is the change in inventory, which in our case was 0, plus sales less purchases. And then we've got the trading income, which is the change in inventory, or the value of the change in inventory, the sales value less the purchase value. Okay. Now, I'll take some questions shortly, but I just wanted to show you the impact of changing stock flow quickly. you can see here, the thing I've changed here is I have sold now 400 does, so my closing numbers are lower than my opening numbers, and I've sold fewer does. Oh no, that's the only change I think I made in this example from memory. So if we go through and look at the impact of that change now, so exactly the same as the preceding example, with the main difference being here, now I've changed, I've now got 200 kilos less. When I sold those 400 does, they weighed less than my closing inventory, so they were lighter. So I've done myself out of some weight, opening relative to closing. And the value that I sold them for in this example was less than the value that the closing inventory is. So I've also done myself out of some trading income. So you can see the impact. That's the only change I've made across this. And now you can see the impact. I've got lower kilos produced and I've got a lower trading income as a result of me selling down inventory throughout the year. That is an important part to the tool, as it will have an influence both on the kilograms produced and on the trading income, which will in turn impact the margin. Okay, now the example I'm going to give quickly with the rangeland goat trading, if I pick the harvesting operation, basically the difference is I flick through to the right-hand side of this tab, and in this case I'm harvesting 500 goats at 40 kilos live weight per head, gave me 20,000 kilos, and the value of that was $35,000 at the time I did this, which is $4.60 a kilo. I note that the indicator's at about $6.20, so I understand that's under current value. So there's a greater degree of simplicity in a rangelands operation relative to a managed goat herd operation. So I think at this stage it might be opportune to take a few. I know I'm conscious I'm halfway through and I've got a lot to get through, but I might take questions if there are any at this stage. That will be through you, Julie.
Yeah, no, that's fine, John. Look, just a reminder, everyone, if you did have any questions for John or myself, please just pop those into the chat function that you'd see on your screen. I think at this point in time, John, we're going through right now. Well, there is some, but I think you'll be covering them off in the next section. So I might just let you continue on.
Okay, brilliant. Thank you. So the next part of the tool, once you have your goat trading details complete, the next part of the tool is the direct goat expenses, which is in front of you now. Now I've divided the page into left and right. The left-hand side provides you with the direct goat expenses prior to entering any data, and the right-hand side provides you with the data that I've entered, which is a rangelands system in this case. If you have a multiple enterprise system, the process will be that you will need to enter your cattle direct expenses, then your sheep direct expenses, then your goat direct expenses at the same time. You can't chop and change between tabs. That is, you need to do them all at once to provide the output if you have multiple enterprises. So the first point of note about this is that all expenses should be entered in GST-free amounts. The next point I want to make is that each of those little question marks that you see on your screen has a pop-up box. Now, because this isn't live, the pop-up boxes don't come up when I hover my mouse over, but if I was to hover my mouse over and we were live, basically the total herd costs would come up with a comment like herd health costs includes trenches, dips, vaccines, animal identification and breeding expenses. So the sum of all those expenses for that enterprise should be entered in that box, in the white box next to the total herd health costs. So we'll just go through these line by line is probably the best way to deal with this. The next line item here, so these direct goat expenses are differentiated from overhead expenses in that they are easily apportionable to each enterprise managed. Overhead expenses are more difficult to allocate between enterprises. So, for example, if you know that you have drench specific to cattle, clearly the only place that can go is against the cattle enterprise. And herein lies an issue if you don't have your chart of accounts expressed or broken up into enterprise level. You may just have a line item that says animal health costs. If you have multiple enterprises, you're then faced with the task of dividing those animal health costs between enterprises. My advice would be if you can break your chart of accounts in your accounting system down by enterprise, it will make this process far easier. Having said that, it's not doable if you lump them all into one. It just takes a little more discerning approach to establish exactly what should go where. The next line item is contractor costs, and this is where you include costs for professional contractors paid during the year. And typically this would be for a rangelands enterprise where you have contract operators to muster and so on. So those costs would go there. You may also have the same in a sheep enterprise where you might put any sort of marking operator or that sort of thing in this tab here because it's directly associated with that enterprise. Transport and cartage costs is pretty straightforward. So in this case, I've got $2,700 for a contractor cost for the year, which is a single mustering operation of a couple of days or couple of half days, and mustering and trucking, and the transport costs there were $1,250. The next is selling costs, and those selling costs are typically commissions, fees, taxes and levies, and in this case it's a goat operation that only has MLA levies, which of course are being put to good use as you are watching this webinar. The next item is shearing and crutching, which may be completely irrelevant, which it is in this case, or have some applicability if you're a fibre producer. And the final one, so if the types of things that would be entered there are shearing, crutching, wool packs, papers, combs and cutters, and dairy-related costs for the next tab. So that is the enterprise expenses. Key message there, if you don't currently break your chart of accounts at an enterprise level, think about doing it. It might add a little bit work at the data entry phase, but it will make a lot more difference in allowing you to assess the relative comparisons between enterprises and which are performing better than others. Okay, the next tab is the supplementary feeding tab. I guess what we've done here is got your homegrown feed fed out, a line for that, and a line for purchase feed. It's a bit irrelevant whether you've got homegrown feed or purchase feed. The key issue is that you put market values for each. The reason that you put market values for your homegrown feed and not the cost to produce is that the opportunity cost of feeding it in your enterprise is the fact that you didn't sell it in the open market at its real value. So that's the price or the value we want you to put in that tab. And in this case, this person, while those goats were waiting to be trucked, there was 6 tonnes fed at a value of $260 per tonne. Now, the point I want to make with this is there's more than one way of dealing with this tab. If all you had was the gross value of your feed, just put 1 in the quantity and the gross value of your feed in the value, and you'll come up with exactly the same result. So with this tool, you need to think outside the square and think, are there other ways of getting to the end game? And usually there are, but it will take some getting used to the tool. Okay, the labour tab. Now this is where the business end starts, because so far we've gone through the really low-cost parts of your business. Labour, of course, is probably the highest cost part of your business. The aim of this tab is really to capture the true cost of operational labour to each enterprise. So regardless of whether you allocate yourself a wage at market rates as a manager or not, there is a true opportunity cost to any labour that you use within the business, and the tool will bring up some default values for owner-operators employed within the business. Now, these are $70,000 for a full-time labour owner-operator and $42,000 for each full-time family labour unit thereafter. The tool also allows for any combination of just salaried employees or casual employees or any combination of labour sources. Look, there's no arguing that the role of a farm business manager is more complex and requires a high degree of skill and aptitude. And I know that a lot of you will be laughing and saying, well, I don't get paid $70,000, but the role of a livestock manager requires an understanding of business management, risk management, marketing, feed, livestock assessment, tactical livestock assessment, veterinary expertise and mechanical expertise, and that's a pretty unique skill set. So the foregone salary should reflect that. If you went to the market and got work elsewhere, what would you be paid in that market? And I think given your skills, it would be reasonable to expect that that's what you would be paid. So that's what we want you to put in here. In terms of what a full-time labour unit is, we're really talking about 240 days a year, and that'll assume 5 days a week by 48 weeks of the year. So if you work 6 days a year and took only 2 weeks off, then you are actually 1.25 labour units per annum. And your labour should be costed at that rate. So the true value of your time, if you're a full-time manager, would be $87,500, which is calculated by that 70,000 by 1.25. So I know there'll be some argy-bargy, there always is, about how we cost labour. The reality is your valuable people value your own labour at the opportunity cost that comes to the business. Now, the other point I want to make about labour now is that labour used for investment in capital expenditure shouldn't be included in the cost of production calculator, as it's a capital expense, not an operating expense. So really what I'm talking is, you know, you might be building a new laneway or building a new fence, that we would consider that to be capital expenditure and should be excluded. So you need a way of effectively calculating how much was capital, how much was operating, to establish what the cost is. 100% of the labour entered has got to be allocated to either sheep, beef or goat enterprises. So there's a slight improvement that could be made on this tool, and because it talks about salary package per annum, my view is that should be salary package for the amount worked, but it's a bit irrelevant. If there are other enterprises on farm, for example crops, or a proportion of your labour is used off farm, then the labour entered in the sheet will need to be adjusted. So effectively where it says salary package per annum is $70,000, if you spend a proportion of your time off farm, let's say it's half, then that would be $35,000 in that tab. So I think that's all pretty straightforward. In the permanent labour cell, it's important to make sure that you haven't double counted that labour that was allocated to this enterprise previously, and you need to include all the costs associated with employment. So it's not just the salary, it's the superannuation, fringe benefits tax, workers' comp, all those sorts of things need to go into this figure here. There's a range of ways of dealing with labour. I think labour is a big ticket item on itself, and we've got limited time, so I'm not going to talk too much more than that, other than to say what the tool will do, will give you these defaults up the top. Because you ticked cattle, sheep and goat, it automatically allocates 33% to each of these enterprises. You can override that by putting in this case, I've overridden it and put in 45, 45. Now it comes up with this red tab. The allocation's got to equal 100, that's fine. On the right-hand side, I've got 45, 45 and 10. Now the way you allocate labour is a little discretionary, and you have the option of either allocating the labour costs here or down here. This little toggle switch here allows you to change the allocation of labour for any one of your labour resources. So you could put, for example, for this casual employee, 100% of their labour. If you click this tab where I've got my mouse, where there's a number of upright lines across horizontal lines, and put 100% of that labour to goats, and 0 to sheep and cattle, and similarly you can do the same here. So even though there's an allocation up here, you can override it by going down to this part of the tool. Okay, overhead expenditure tab. Incidentally, the reason this sounds rushed is that effectively I'm putting a full day workshop into 45 minutes or a bit over, and it is rushed for that reason. So I just want to get on to into some of the issues associated with the overhead expenditure. The allocation of general overheads is done manually, and you can do this by either using these percentages which were predetermined or overwriting them again as I have done here, but then you have the option to overwrite them by clicking this little button here, which is this one here. If you click that button there, what that will do is allow you to enter different categories here, here and here. So you can see that that line there is different to this line here because, and I'll talk to why that is shortly. Okay, so the allocation of, sorry, in the preceding, I forgot to add that poll in the preceding slide, but I saw that some of you had already answered it in earlier, and I think the question was, what do you think you were worth? And I noticed it was fairly evenly distributed, and I was surprised that a lot more of you didn't think you were worth more than $70,000. Because I think you are. In any case, let's progress. So I'm not going to go through each of these, but I will sort of talk to what the issues are associated with each of these overhead costs within the business. So the first is repairs and maintenance. Now, I am a bit loath to, we need to distinguish between repairs and maintenance and capital expenditure. We understand that there are incentives tax-wise for you perhaps putting as much expenditure into repairs and maintenance rather than capital expenditure. I know none of you would do that, but if you did happen to do that, what we want here is basically the true estimation of your repairs and maintenance. So for example, if you put a 10-kilometre new fence up, we don't want that as a repairs and maintenance line. We want that as a below-the-line expense. It shouldn't be in here. The true repairs and maintenance would be, you know, the cost to fix a fence that's falling down or to put in new posts and that sort of thing. So in this case, the repairs and maintenance is $12,000. Now, over here where I've said edit additional individual overhead allocations, what that's suggesting is that in this case, 45% of that $12,000 should be allocated to the cattle enterprise, 25% to goat enterprise and 30% to sheep. Now this is a bit of a discretionary issue and you have the discretion to allocate each of these enterprises based on whatever you consider to be appropriate. So if we go down to electricity and gas, down here you'll notice that the sheep enterprise has 65% of the $8,000 cost. The reason for that is that shearing has a fair draw on the electricity resources in this business, thus it's allocated a greater proportion of that shearing overhead cost. And so you do that for each specific overhead cost. So plant and equipment, repairs and maintenance to plant and equipment is the next line, and each of these, there's a descriptor when you toggle on this little question mark, a descriptor will come up so that you understand exactly what should go into that category. So you can relatively easily take this out of your chart of accounts. What's harder is then allocating it between enterprises because it takes some discretion and discerning business knowledge to be able to allocate it between enterprises. The other way you could do it is allocate it based on a relative contribution of income or a relative contribution of the DSEs running or any other number of means of doing that. In the depreciation cell, what we're looking for there is the value of depreciation across all non-fixed plant and equipment. So in order to do that, I think the simplest way is to consider the value of each item at the start of the year and the value at the end of the year. Consider the value by thinking about what it would raise at a clearing sale, and there you should have the difference between opening and closing, which is your depreciation value, and you need to do that by item. And the second part of it is alternatively you can give a rough estimate and suggest it'll be 10% of the total opening value of all that plant and equipment. Administration expenses, they're going to include telephone, GST component free, telephone costs, fax, internet, postage, general office expenses, accounting costs and compliance costs. Don't include admin labour if you've already accounted for it previously, and you need to take out any personal expenditure items out of that line item. Insurance and so on, pasture costs is another item there. Rates and rent should be pretty straightforward. How you allocate it will again be a slightly discretionary issue, might be on numbers or contribution to income. Fuel and oil might be the same. Could be that you do a lot more running around for your sheep enterprise than you do for your cattle or your goats. Then that should be weighted higher towards your sheep enterprise. Incidentally, that's just fuel for those livestock enterprises. If you've got a cropping enterprise, obviously the fuel and oil associated with that should not go in there. And then you have this little tab down here which allows you effectively to add any additional overheads. In this case, I've added motor vehicle expenses to the tune of $2,500. You have exactly the same capacity to do that within your own business. I've talked about capital expenditure and operating costs. Really, we want operating costs in here, not capital expenditure. The second, I guess, point of clarity that's required here is that finance costs, which are interest or lease costs, aren't included in the cost of production calculator. Using the methodology that we promote, having said that, you've still got the capacity to add them as an overhead. Now the reason, I'm just going to clarify the reason that we don't think that they should be included. Look, finance costs They're important for each individual business because they impact on the taxable profits and the surplus cash flow of the business. But the cost of production calculation is about the operational efficiency of the business. So finance costs don't contribute to the operational efficiency of that business. So they're a discretionary item. And some of you are going to argue that point, I realise that. But that means that it's not necessary to have debt to run a business. You might run it differently with debt than without, but a farm with no debt and therefore no interest costs is going to have a very different cost of production to a business with, say, 70% equity and large annual interest costs if you put it into the cost of production. If the interest costs are included in that calculation, then it's going to distort the outcomes and make the comparisons far more difficult. If you're only doing it for your own use, then I don't have a problem with it. But if you're using it for comparative purposes, then there is a potential issue. The methodology basically apportions costs based on the contribution of income or profit. So because land appreciation or capital gains aren't included as an income source in the tool, there's no way of apportioning those interest costs from the enterprise towards the real estate part of the business. So I think that's important because large portions of debt usually come from land acquisition rather than the operating part of the business. So that's the reason that they are not included. Okay, so on a marathon effort, we've now basically put in all our data into the tool. We're now at the output stage. Now, I'm not going to dwell too much on the outputs part of the tool other than to say this is what it looks like. So from the outset, we've got 3 enterprises in our tool. We've got beef or cattle enterprise, a sheep enterprise and a goat enterprise. You can see the relative contribution to income in this first graph here. You can see the relative contribution to the expenses in this graph here, and you can see the cost of production here. Now that cost of production has been generated based on, it is a cost of production in terms of live weight for cattle, and it will be expressed as dressed weight for sheep and for goats. Over on this tab, you've got a number of breakups here. So all of the information that we've entered in the preceding tabs comes into this tab here. And in this example, we've got our income, our direct expenses, but the summary part is in this highlighted cell. So our cost of production is very low at $1 per kilo live weight. Our income, which is our trading income, was $3.47. So the margin, which is the bit we keep, is $2.47 per kilo of live weight sold. And that is expressed, that is broken up into expenses, overheads, so enterprise expenses, overheads and labour costs on this graph here. And there's a nice little industry benchmark tab down at the bottom. And, you know, those ranges are from some benchmarking data. So if we go through to the next slide, the same thing occurs for sheep. So this is expressed in dressed weight, and you can see that there is an opportunity there to edit your dressing percentage. In this case, the default, I think, for lamb is 46%, and I believe the default for goats is about 38%. You have the opportunity to edit that by pressing that edit dressing percentage, which will clearly change the outputs of the tool down below. I'm not going to speak too much more to that because I think next week is all about the interpretation and how to use the information. I think I'll hand back to Julie at that point and open it up for questions and hopefully address those in a manner that's appropriate to you guys.
How come it won't let me compute?
Thanks very much, John. Look, we do have a couple of questions coming through. If anyone's got any other questions, don't forget to just pop those into the chat functionality on the program. One of the questions is coming, just double checking for cattle operation where they can access current kilograms, price per kilograms to pop into the calculator. And look, that's a similar question for sheep and cattle as well. I will send around, there's some information and regular reporting on the MLA website that's freely available for you to access with all the current pricing information, and it's also historical, so you can search through the historical reports there to look at trends and so forth as well. And I'll include the direct link to that in the email I'll send everyone after today's webinar.
Yep. Can I just contribute there? Can I just contribute there? So it would appear that those people are obviously using the tool in a different way relative to the one that I've just established. The way, unless they're using it as a forecasting mechanism, but the way to find it from your existing records is to basically sum all of the receipts, sales receipts, and to divide by the total number of kilos. Now, if you only sell in dollars per head, then it's important to have some sort of means of estimating the weight of all those livestock and those different cohorts of sales at the point of sale, because unless you do that, the tool will not provide a sensible output.
Okay. Thanks, John. Had another question come through just in relation to allocating the value of fodder crops such as oats grazed, and they were wondering if the best method was, I think as you explained just before, by adding all the cost of the crop and allocating to each enterprise and the overheads. Is that right? Yeah,
look, the fodder crops is, thanks for the question, whoever provided it. What we tend to do is, again, it's a reasonably discretionary, it's a discretionary value, but the way you can value it effectively, given that this tool doesn't have any appropriation of income or expense to cropping, the means of doing that is you place a value of the crop that's been grazed in gross terms on the crop and put it in the supplementary feed tab. So you would do that by effectively, let's say you consider the crop, the grazing value was $5,000, and you may have discerned that by establishing the value of weight gain that they achieved on it, or alternatively you may put a straight adjustment value on it. Either way, you can place that as a supplementary feed expense. In our benchmarking, which is a slightly more comprehensive process, that's exactly what we do. We allocate the expense against the livestock enterprise, but on the flip side of that, you need to allocate the income to your cropping enterprise. Now, given there's no cropping enterprises in this tool, you are just allocating the expense component. But I think it's a very good question from whoever posed it. Thank you.
No worries. Leanne asked the question. Oh, no, it wasn't Leanne. Sorry, it was Ian and Brenda. And Leanne has also responded saying it was a really good answer. Okay, is there any other questions coming through from today's audience? For John, we can run over anything that might have been a bit confusing or talk through a bit quickly. Another question comes through, how would you allocate the expenses of, say, establishing a Lucerne stand?
Yeah, look, that's an interesting question. If that establishment of a Lucerne field is a regular part of your program, So I'll give you an example. If the pasture, and this is really about whether you allocate it as a capital expense or an operating expense. If the pasture is expected to last, say, 10 years, and the cost of sowing down, so the way you can do it is twofold. If that is a regular part of your program and it represents a small proportion, but you do that every year, I would put that in the overhead cost of your business. If you have a program where you are doing more than what would be considered to be, a tenth of your whole place, or if you were going ahead and cropping and pasture establishing half of your place, then I think there would be a case for putting a certain proportion under the pasture expenses and the remainder as a capital expenditure item.
Thanks, John.
So hopefully that answers your question.
Thank you. Greg, who asked the question, I mean, if you need any further clarification, just let us know. John, do you mind if I change it back to make myself presenter now?
No, that's fine. Look, I just wanted to make one other point.
Yep.
This is a very brief snapshot of what is a 2-day course. If you want to take part in that 2-day course, cost of production course, we're more than happy collectively, I think, between Julie and myself to run that for you. The requirements are that you need a minimum number of people. Clearly, you get far more interaction. The other thing is the step on from that is something like the Southern Business Edge courses, where we get into a lot more detail about the business operations as well. But thank you, and back to you, Julie.
Thanks, John. And look, I'd have to agree. Doing something like the Business Edge course, it's a 2-day course. It's absolutely excellent. It takes you through some really practical examples in terms of working through your accounts and what to look for if you're looking to purchase another property, for example, or how to best invest the funds that you might have. Whether you're looking to upgrade your cattle yards or something like that. So it's absolutely excellent. And what I can do for everyone who's dialed in and registered for today's webinar, I can send you through some information via email just on some of those courses and who you can get in touch with if you want to register or you want something held in your area. So look, I just want to say thank you very much again to absolutely everyone who dialed in for today's webinar and gave us your time and attention. As I mentioned earlier, the webinar is going to be recorded, so we will be uploading this recording website, so you'll be able to go back and have a look at particular sections again if you need reminding when you're using the tool. And if you've got anyone else that you know of who wasn't unable to make it today to listen in, please just feel free to send them the link, because I'll circulate that so you can you'll be directed to where the webinar is saved on the site. If you need any other information, I mean, there's a link there to the cost of production calculator tool. There's also, if you're interested, you've got any questions about things like pulpy kidney or tetanus or a variety of other things like market reports, that type of thing. There's a whole series of webinars that have been held previously, both by MLA as well as the group called Leading Sheep in Queensland, which are absolutely excellent, and some ones around, just working through your accounts to make sure that you're setting aside enough in your business for your own retirement, your superannuation or the kids' schooling, that type of thing. They're really, really good. If the price per kilo has sparked your interest and you want to know more about goats, please just flick us an email. My email's up there on the screen. And there's things you can subscribe to for free just to get a little bit more information, market reports, industry-specific newsletters, that sort of stuff. We've also got some information just around where you can go to for more information for different number crunching and statistics and so forth. we have, as John mentioned earlier, we've got a webinar that's happening next Thursday at the same time. It's a follow-up to this one, and it's just working through that results section in the cost of production calculator. So once you've managed to put all your data in and everything, we want to actually be able to show you some ways that you can use and interpret that data. So it's not just a data entry process. It's actually going to provide some direct value back to you. Look, if there's no further questions, what we might do is wrap up today's webinar. I just wanted to thank everyone again very much for dialing in. Please make sure you join us for next week's webinar where we work through all the results and so forth. And I'll send, as I mentioned, a link around to that so you can register directly. And thanks very much, John, for your time and all your experience and advice in using the calculator. It was greatly appreciated, and we've got some good positive comments coming through on the chat line about, you answered questions really well and everyone's happy, so that's awesome. But anyway, that wraps up today's webinar. Hopefully we'll see you again this time next week. And yes, thank you so much for joining us and have a fantastic day.
Very much. Bye-bye.
She's going to have to go in and get tokens every time I want to use it.